Hey everyone, welcome back to Wealthstone. It's May and we've got a lot to unpack. Between market volatility, cautious central banks, international strength, and new developments here in Canada, this month is a reminder that staying informed and staying focused is more important than ever. Let's break it down and talk about where we go from here. Let's start in the US, where April ended on a soft note and early May brought continued market volatility. April was a wild month for the S&P 500, but it's been recovering nicely and is up 5.7% for the month of May as of this recording. It pays to be patient. Tariff discussions are heating up again, especially around tech and pharmaceuticals, and as always, the market doesn't love uncertainty. But if there's one lesson we keep coming back to, focus on fundamentals, not fear-driven headlines. Here in Canada, the picture is more stable, but not without challenges. Growth remains slow, consumer spending is softening, and housing activity is pulled back from last year's highs. But there was a bright spot in April. Inflation dropped to 1.7%, thanks in large part due to the removal of the federal carbon tax. That's given the Bank of Canada a little more breathing room, and rate cuts could come as early as this summer. Politically, we're watching for clarity from newly elected Prime Minister Carney. I'm hopeful we'll see a more defined economic roadmap, because if there's one thing the markets really dislike, it's uncertainty. Come on, Carney, let's see what you got. While North American markets have been choppy, international equities, particularly in Europe and emerging markets, have been gaining ground. This trend is reminding investors why global diversification matters. For over a decade, U.S. stocks have led the charge, but 2025 is shaping up to be a year where international exposure may offer more value and stability. If your portfolio is heavily tilted towards Canada and the US, now might be a great time to revisit your allocations and think more globally. If you're in one of my portfolios, then I've already got you covered. This has been one factor that has been driving outperformance so far this year. Now, let's talk interest rates and how they're shaping fixed income strategies. In both Canada and the US, central banks held rates steady again this month. But with inflation easing, particularly here in Canada, there's a growing expectation that we could see cuts later this summer. That's pushed many investors towards short-term bonds, high-yield corporates, and even GIC ladders. These instruments are offering solid returns without the long-duration risk. A great fit for conservative investors or anyone looking to generate income while waiting for equity markets to settle down. To wrap it up, here are the key takeaways for May. U.S. markets remain volatile, with trade policy and earnings in focus. Canadian inflation is cooling, which could mean rate relief is coming soon. And international equities are gaining traction, reinforcing the case for global diversification. And fixed income is back in play, especially for investors seeking yield without taking on too much risk. As always, don't let the noise throw you off your plan. And remember the words of Warren Buffett. The stock market is designed to transfer money from the impatient to the patient. So stay patient, stay diversified, and if you have any questions about your strategy, I'm always here to help. If you're a regular viewer, thank you for your support. And if you're new here, please hit the like and subscribe button to keep up on our updates. Until next time.